Let's get in a set of special guests. Balasubramanian, MD and CEO of Aditya Birla Sun Life, and Prateek Agarwal, ED of Motilal Oswal AMC, join us right now on the show. Gentlemen, thanks so much for joining in. Bala, what's your sense? Right now, the market's a bit nervous. We don't have the numbers out as yet in totality. But if it is political and policy continuity with a lower majority, is that near-term worrying for the markets or not quite?
I think more than near-term worrying, I think we'll have to look at today's fall in conjunction with yesterday's rise. We saw significant pullback in the market yesterday on the back of short covering, as well as on the exit poll outcome that was being shown. And today, of course, there is the disconnect between the exit poll outcome versus the actual numbers. Therefore, today's market reaction should be looked at from that angle. But given the fact that the results is what is showing up, I think as we move forward, one, of course, market will start looking at after the government formation, policy continuity, there will not be any doubt. In terms of expectation of growth for the overall economy and push that they are giving, I don't think will be any doubt, and that probably will be assumed it will continue for driving the growth momentum for the country. What could probably come in the way is actually the way there has been opinion being expressed that the Indian markets have been exceedingly well, and what the kind of valuations one has to pay in certain segment of the market. And those are the debate discussions will come. Therefore, the rate of momentum in the market probably could probably take a back seat. But that doesn't mean it's taking away the buoyancy which is being built for India as a story as we move forward. I think that's not going to something that will get derailed. Probably it's a good reason for the market also consolidate and before it takes off on the back of earnings as well as back of the growth coming back to the systems, big time.
Okay, Prateek, what's your stance for somebody who's listening in right now and trying to understand what should an investor do? What would your advice be while we are in this period of uncertainty with regards to the seats? Okay, I don't think Prateek, you'll have to unmute yourself. I think you're on mute.
No, so depends if the investor is long-term or otherwise. I think the long-term stories continue to remain the same. Many of the spaces which were doing well in the markets were in line with Indian aspirations and global aspirations. Those stay. If the dispensations don't change, mostly the policy direction would also remain the same. So, a dip in the market in a strongly growing economy like India almost always is a great time to nibble. But yes, like Bala was saying, one has to look at it in conjunction with yesterday. We got a large bump up yesterday. We got a dip today. We are getting a dip today. Maybe it is best to let the volatility settle and then come in. So unlike managers who compete with the index and with each other for performance, I think investors need not compete. They can sit out, let the dust settle and come in, when the thoughts can be much more rational.
In that case, Prateek, you're sitting out of the markets right now. Would you wait for a little bit of a steeper correction? I mean, of course, we don't have a correction at this stage. Before you go out and accumulate, what is the strategy at this stage?
No, typically, we stay fully invested, more or less, and that is the case now as well. When markets are very strong, we thank God and sell a bit. When markets are weak, as they are today, if we have cash on the sideline, we try and nibble a bit.
Got it. Okay, I think I've lost the line there with Pradeep, but let me come to Bala right now. We look at what's happening in the markets and what the election screen is, Bala, from a very trader and the day's point of view. But the fact is that right now, the kind of investments in mutual funds means that what happens on the screen is a matter of concern or involves hard saved money for crores of Indians. So for people who are watching this and are wondering kya hone wala hai, maybe a little concerned, they have their investments in and are in mutual funds, etc. Give us that picture that at the end of the day, it's about the India story, isn't it?
Yeah, Taman, I think if you look at from mutual investors' point of view, so I would probably say they are the largest beneficiary of the Indian market doing well on the back of Indian economy doing well in the last 3 and 5 years. If you look at the inflows that started coming to the MF industries after the 2019-2020 credit market crisis, and subsequent to that, since the fall that we saw post-COVID, the significant flows came to the two period, one till 2018, and then from 2021 till date, we have seen the continuous flows coming in. And if you look at all the investors who have put money and stayed invested in the mutual fund for the last, say, 10, 15, 20, 30 years, they have made a significant amount of money on the back of just staying invested on the conviction that, yes, Indian market will do well, on the back of Indian economy continue to do well. I think that story doesn't change. But as we move forward, this 1 or 2 days of volatility is something should not bother investors from their investment outlook point of view, because India will continue to remain one of the large market to look for, which is about 5 trillion economy. When 10 trillion economy is not in doubt. Economy growing at about 8.2% is not in doubt. Economy interest rate remaining somewhat stable, therefore more private capex will come on the back of government funding. Nothing is going to change. Fiscal is not going to change. Of course, the political dynamics will keep on evolving. But what we have seen in the last so many number of years, policy continuity has been the biggest boon for India, irrespective of whichever the style of operating of the political party is. That's the way it has been. Therefore, from the investors' point of view, I think they have to stay convinced that, yes, they have to make investments in equity for long term. But at the same time, somebody has come only looking at the last 1 year return and say, I'll have the probably repeat of same return for the next 1 year. That probably may put them in a disappointment. But I think if they look at beyond 3 to 5 year kind of period, I think the mutual fund investors will continue to be the large beneficiary. In fact, I did some bit of math, especially when FIs were selling in India, the mutual funds investors have been the large beneficiary of the outperformance that has come in Indian market, because Indian investors have been participating in the India growth story through the mutual fund vehicle. That's something I see as a big change that Indian investors would have experienced compared to the early period, maybe about 5-6 years back.
Yeah, so that's important, isn't it? That's the big picture. I'm not sure if Prateek is still with us. Prateek, if you can hear me.
I'm there.
Yeah. Okay. So.
Yeah, I can hear you.
So the thing is, and this consistently has been the narrative and the fact that the India story is an ongoing story. We are the largest population in the world. We have shown grit on how to grow, and we've seen that in the last 10 years as well. As of now, what the picture is showing is policy continuity, exactly what the street wanted. Yes, politically, maybe the situation at the end of the day would be slightly different from what most people expected, but that's politically. In terms of policy decision, which is at the end of the day what the street sees, would it be fair to say nothing really has changed?
So, yes, as of now, those are the thoughts, but let us see how the portfolios get distributed. One may have to wait for that. See, India is a very intelligent set of people, very high on aspirations. So there is a potential growth that the country would do irrespective. What the leadership of the country does is to try and remove bottlenecks, that come in the way. It could be money, it could be technology, it could be raw materials, whatever roadblocks come in the way, and improve the growth quotient of the country, the potential growth of the country. If you look at the past period, beginning of the year, economists, who work with the constraints would paint one picture for the growth of the country. The end result has typically been better. Okay, so if the constraint was money, you got a new source of money, let's say from a JICA kind of a source. If it was raw material, that got sourced, and so on and so forth. Now, with whatever we are seeing, I
Prateek,
think
can
that
I
will
just
change.
ask you about the first line that you said, that we have to wait and see the portfolio distribution? And I found that very interesting, because that is something which has been frankly a non-event in the last 10 years. That you know who's running the PMO, you know who's running the government, and then of course ministers do their work, but who that minister is really secondary. Why do you think that portfolio distribution becomes a key trigger for the market to watch?
No, so the same construct can continue if whosoever comes to power comes with simple majority, at least by itself. If not, then they will have to take a few other people along with them, give them space, and the pull probably cannot be as strong, or would not be as strong as earlier is the thought.
Okay, the yields have spiked a little bit as well when the early morning trade came out. I don't know if there is a bit of a cool off there as well or no, but I think a lot of moving parts, and I think some of the answers will get known in a few hours from now. This is not a 2019 or maybe even a 2014 where in 9:30 by 9:30, 10 or 10:30 you had a clear idea of what's happening. So just want to see if we can get the yields up, but keep that at the back of the mind too. The index is now steady at about this 2% mark, so that's to be kept in mind. Prateek, the other question is, would earnings growth in any fashion get altered as a result of this? I mean, would you presume that the focus on infrastructure, capex, etc., comes off a little bit? Maybe it will have to be a bit more populist as well, considering that it is not such a runaway win as the exit polls were predicting, or as the belief was pre-election.
No, given the thought process that I understand of the currently ruling dispensation, I see no threat of that. Populist is to give somebody money without work. Otherwise, if you are spending on construction, nation building, etc., it is giving money with work. Which one do you choose? Any individual who has self-respect would choose work and be paid for it rather than be given out a dole.
Same question to you really, Bala. I mean, would you believe that there could be a change, and maybe the market would believe that there will be a change? Let's go for defensives where there is more stability, because the thrust on capex might come off a bit. Maybe there could be some more populism as well, because we know there has been a rural stress across for the last 6-9 odd months. So any thoughts there?
I think anyway, the way I look at, there will not be any kind of change in the overall policy, given the fact the overall policy framework which has been laid out in the last few years have been benefiting not just the broader economy growth coming back. It's also been improving the overall number of companies who have been benefiting out of it in terms of profitability, in terms of creating employment, and so on and so forth. So there has been a significant improvement that has happened. Therefore, just because of we want to be populist, because the vote share has, maybe the number of seats that are winning is actually lower than what you expected, I think that will change. I think overall fiscal improvement that we are seeing, I think that should continue. Maybe from a rural economy point of view, to lift the agri economy, there could be something which will be done. But again, I don't think anything that the government would have to do more populism in nature to drive the economic growth. I think they continue to focus on investment-led growth and focus on creating employment. That itself would be sufficient enough. Some of the measures that could come, which are more populistic in nature, as there has been some school of thought to provide insurance cover for people who are above 70 years age, which currently they are eligible. That is assuming scenario, something of those kind of is rolled out. The natural will come at the cost of fiscal support initially, but at the same time, over a period of time, they will get adjusted. Any trigger that you have to do that will do good for the economy, the government has to take initiatives, which may be seen as initial in the populistic nature, but over a period of time, it can benefit significantly As we have seen in the case of the Jandan Yojana, initially it was felt it is not a great idea, but ultimately we have seen how the benefit got accrued. Therefore, those are some of the steps which may be taken post-government formation that should not be seen as a populist from a so to speak point of view.